Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Dow is heading towards an index level of 20,000, just ahead of the next Federal Reserve rate decision. However, in China, there was a data dump yesterday. China's industrial output expanded by 6.2% year on year in November, thanks largely to electronic equipment and automobile sectors. That's what official data showed overnight. But it's their capital asset investment data that is interesting. It rose 8.3% year on year to almost $11 trillion in the first 11 months of 2016, and growth is now stuck at that level and far below the level seen in the previous year. Infrastructure investment expanded 19% in the period, while investment in high-tech industries was up 16%. But it is being driven by state-owned enterprises whose investment climbed more than 20%. Private sector investment, which accounts for more than 60% of the total, grew just 3%. And China's retail sales grew 10.8% year on year in November, a slightly faster pace than the rise posted for October. It is their online sales segment that is driving this. Traditional retail is struggling. In Europe, the Greek crisis looks like it might flare up again. The Greek strategy seems to have been based on winning more debt relief concessions, but the prospects seem to have dried up. Greece wants more loans just to pay for its daily operating expenses. They're not really making any structural adjustment progress, and voters are wary of austerity. So the Greek government is raising state benefits and transfers, and this will no doubt cause a crisis in its relations with its creditors again. A New Year Greek crisis is now a traditional item on the calendar. In Australia, the CBA has become the latest big bank to raise interest rates for property investors. They're up another 7 basis points to 5.56% variable, up 15 basis points for a line of credit. The other major banks have also done the same thing recently. What makes the CBA move interesting is their statement that they don't want any more exposure to property investors. They see risk and regulatory limits with extra exposure. Aussie house prices have grown at their slowest pace in 3 years. In New York today, the US Treasury 10-year yield has edged higher to 2.49%. Oil prices are holding at their higher level, now just over $53 for the US benchmark, while the Brent benchmark is now just under $56 a barrel. Just to give you an idea how quickly oil markets are responding to the new higher prices, North Dakota's crude oil production is back above 1 million barrels a day. The gold price is now down $7 an ounce to $1,156 an ounce. Investors in gold ETFs are reducing their exposure. The sector cut 12% from its holdings in November, becoming a net seller. New Zealand dollar is higher today, now it's 72.1 US cents, but it was quite a bit higher earlier in the night. On the cross rates is at 96.1 Aussie cents, and against the euro it's up to 67.8 euro cents. The TWI is now at 77.9, still at an 18-month high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.